Hello, everyone. Good afternoon. Can everyone hear me? Great. Perfect. Perfect. Thank you. All right. So if we can have everyone muting back and we can start. So thank you so much, everyone, for joining the Investing for Stable Returns in Times of Crisis and Beyond webinar. We are so happy to have you with us, and we're very happy to have the team at SIB joining us. In a bit, we will be handing over to Nashon. Nashon is the Executive Director at SIB for Global Markets, and he will be taking us through a little bit about what SIB does as a bank in terms of investments, what their experience has been with local investors as well as global, the newly launched product for global markets. And really, there's a lot of insights that he will be sharing with us in terms of why global markets, for example, would be more receptive for investor investment as opposed to just investing locally. So we will have a Q&A session at the end of the 20 or 25 minutes or so. So please, either you can type your question in the chat box or you can ask your questions at the end of the session. So I would like to ask Nashon to start the session, please.
Okay, good afternoon, everyone. And Renu, thank you for having me, and thank you for the interest in having this conversation about how we can invest in stable, invest in these turbulent periods, and how we can actually derive a return during these periods, and what we need to do to be able to do that. So my name is Natasha Mungai. I'm the Executive Director of Global Markets here at Standard Investment Bank. And within the Global Markets Department here at Standard Investment Bank is also where we run the Monsta X fund, which is the most recent multi-asset strategy fund that we've launched in Kenya. So right in front of you there, you have, I hope everyone can see the PowerPoint presentation there. I'll try to run through it as quickly as possible so that we have enough time for Q&A, and I think for me today, that's the most important thing. I actually want to engage with the audience more than just talking to you all. So I will try and be as quick as possible with this presentation. So I'll start by telling you about Standard Investment Bank, who we are, very quickly, and then I'll introduce you to our team, the people who run Standard Investment Bank. And I will also share with you some of the banking and investment banking solutions that we have, and finally get to what I really want to talk about, which is a Monsta X fund. And it is through talking about the Monsta X fund that I believe we'll be able to tackle the topic of the day. So Standard Investment Bank is one of the largest investment banks in Kenya. It's a fully indigenous bank. I know a lot of people ask whether we are affiliated to the Standard Bank Group, the global one. We are not. We are actually an indigenous investment bank that was founded in 1995. We're actually celebrating our 25-year anniversary this year. And we have 850 million shillings worth of shareholder funds, licensed in 2005 by the CMA as an investment bank, and are members of the Nairobi Stock Exchange, CDSC, and CASIB. That's the Kenya Association of Investment Banks. So who do we service? Which kind of clients do we have? Most importantly, everybody, but specifically governments, fund managers, corporations, financial institutions, high net worth individuals, and everybody else, also known as retail investors. So we serve everybody, and we have solutions for everybody. So in front of you there, you have our milestones, our journey as SIB. And you can see that we were registered in 1995, and from there you can see how our journey has been, starting off as standard stocks, as a stockbroker, and gradually going through the motions to finally turn into an investment bank, win several awards like the best investment bank in 2008, and then go on ahead to advise on the largest transaction that's ever happened, which was a 28 billion shillings rights issue for Kenyan. And then as recently as 2 years ago, get licensed as the first online Forex money manager in Kenya. And then just last year, deliver a market-beating return through the Monsta X fund. So that's our journey. And what are the highlights? So we have closed over 60 projects successfully, all of this worth over 200 billion shillings. We have advised over 25 billion shillings in public infrastructure bond offers and then with Kenyan, advised on their rights issues, and also advised on a 1 billion ABC Bank bond. We've done several rights issues, several takeovers and mergers, and several business valuations. So as recent as you probably saw about the Kenyan core bill purchase and how this was done, we were the advisors behind this transaction. So those are some of the things that we do. I don't want to go into details, but I think you get the picture that we are generally an investment bank with several solutions that we can offer everybody. So who runs Standard Investment Bank? That's our entire team right there in front of you. I hope everybody can see them. So we're a large firm with various finance industry professionals, various backgrounds, various qualifications, but all this coming together to gel into an investment bank that can offer ready-made solutions for everybody. This is our board of directors, starting with our managing director there, Mr. James Wangunyo, who is also the founder of the company. And the others are the other 7 directors who sit on the board. So what are the several financial instruments that we offer? The first one is equities. So we have a very strong equities desk helping to execute equities trading on behalf of financial institutions and individuals as well. So if you're looking to buy or sell shares, then Standard Investment Bank is able to do this for you. And we actually the first investment bank to trade in the NSE derivatives market and continue to play our role as a market maker in this space. We're also very big on fixed income, meaning we're able to trade in government bonds, whether issuing them, doing secondary trading for them, and executing orders on behalf of our clients, both local institutions, local individuals, and also a lot of foreign participants in the fixed income market. We're able to do that for them. So corporate finance as well is one of our big things. We have been sought after to advise public and private institutions where they seek our advice on how to manage their strategic growth, structure their balance sheets, raise capital, and restructure their enterprises. We help to advise on this on a regular basis, and it's actually one of the biggest strengths that Standard Investment Bank has. We have won several awards in this. As early as last year, we won an award as Africa's best deal-making investment bank in the corporate finance space. So we also have a strong research desk doing due diligence on behalf of our clients, specifically mostly fund managers, to provide insight for them in terms of investment opportunities that they have and to offer clarity on this. And in this area, we also share trading brief, fixed income wraps, weekly equity market reports, monthly and quarterly reports. And for anyone who is actually tuned into this webinar today and you're interested in receiving our research insights, we can all share, we can take your email addresses and be able to share with you on a regular update just to keep you updated. And then now the most recent department, which is actually the department that I run, which is a global markets department. We give clients exposure to global markets and to financial instruments which are predominantly traded on a global platform. On top of that, we're the only investment bank that offers currency hedging solutions. So if you're running an enterprise and you're concerned about the exposure you face due to foreign exchange fluctuations, then we are able to offer you solutions around this. So now let me introduce you to the fund that we refer to as Monsta X, which is the most recent product of Standard Investment Bank. So the definition of Monsta X is that it's a global multi-asset strategy fund. And this is important for you to remember as we go on with this conversation around how you can navigate turbulent markets. So it's a global multi-asset strategy fund with a long-short trading model that invests in global online foreign exchange markets with a primary objective of capital growth for its investors. And for clarity, we are the only ones that are licensed by the Capital Markets Authority to actually trade on behalf of clients in the online forex trading space. So this is very important to note because we have seen a lot of individuals out there who claim to be able to trade forex on behalf of investors. And in case you invest with them and anything happened to your capital, then you have no recourse to the Capital Markets Authority. So you can only ever come to, or rather, you should only ever come to us if you need services in this. So how do we protect your capital? What do we trade in? So first, I'll very quickly go through the instruments that we trade, and these are divided into 6 categories. So the first category is currencies, okay, where we trade all the world major currencies. Think about the dollar, the pound, the euro, Canadian dollar, the Swiss franc, Japanese yen. We are able to buy and sell these currencies against each other to offer our clients returns or to offer clients hedging protection against their exposures. The second asset class that we trade are precious metals. So we are able to buy and sell metals like gold, silver, platinum, palladium, take positions in this on behalf of our clients and squeeze out a return for them. We also trade in commodities. So commodities include natural gas, oil, coffee, cotton, and we can give our clients exposure in such commodities. The fourth asset class that we offer our clients is exposure to global stock indices, like the S&P 500, the FTSE 100, the German DAX, Japanese Nikkei, French CAC 40. So think of all the major world stock indices. We are able to offer our clients exposure to this in the Monsta X fund. The other category of asset classes that we trade is actually now specifically drilling down into single stocks. Okay, so if you're looking to take a position in Zoom, like right now we are using Zoom, and you're probably curious, how do you benefit from a stock like this? You can only then do this directly through investing in Monsta X, because we can take positions in some of these in some of these stocks directly. Then the last and very important one, and I'll explain why, is the cash and cash equivalent assets. Okay, so this is also a significant trading strategy for the fund, making sure that we have asset classes that do not have any risk in terms of how market turbulence is and how they are then affected in their valuations. So I want to dwell on this a little bit just to explain, because the topic of today is, right now we're in a very unique period in history in terms of nothing is the same anymore. There's that saying that we are not in Kansas anymore. So right now, we've seen turbulence in almost every asset class based on this COVID pandemic. Liquidity has dried up in most of the major world markets, in almost every asset class that you can think of. And based on this, new realities have been created, not only for market participants, but also for investors who are now worried about the safety of their funds, number one, and two, whether they have any hope of making money in the future for themselves and their families. And I think that's one of the most important topics that we therefore wanted to help our investors to understand today. So when somebody asks me right now, if during these turbulent periods, during this turbulent period, how can I protect my portfolio? The first thing I tell them is you have got to have a genuinely diversified portfolio. So number one, that's the most important thing. Let's have a look at how investors in Kenya specifically, because those are the people I'm speaking to mostly today. Let's see how a typical Kenyan over time has treated their portfolio. They have had very few alternatives to invest into. So you have the Nairobi Stock Exchange. You probably look at Kenyan government bonds. Then of course the most popular is the Kenyan real estate sector, which for the longest time people have treated as almost like a gold standard. It can never go down. So that's a real estate sector. Then the fourth instrument that a lot of Kenyans will invest in is purely cash, just placing cash with banks. So all these are well and good until you're in a situation where liquidity dries up, as it happens in an event like what we are going through right now. So what the COVID pandemic has done is to remove economic activity as you typically be used to, and by so doing, literally sucking out any ounce of liquidity from any type of markets. And by doing this, then any investors who are holding what you call long positions in any of these assets are left exposed. So we as Standard Investment Bank have always worried about a scenario like this. We have always worried about a scenario like this because we've been in business for 25 years and we have seen the ups and downs of markets. We have seen various market cycles. And we therefore created a fund specifically to protect our clients when markets start losing value, so that we can be able to give them a return whether markets have lost value or whether they have gained value. And this is why when people ask me how you can survive this period, then I tell them you have a truly diversified portfolio. So if you're holding stocks in the Nairobi Stock Exchange, you can only ever make money if the stock market is going up, isn't it? So within Monsta X, we have we use what is called a long-short trading strategy. So how does this work? A long strategy means you only make money when the stock market is gaining in value, or whatever asset class that you're trading is, whatever asset class that you're holding is gaining value, then you will make money. That's called a long trading strategy. But there's a very interesting concept called a short trading strategy, where if a certain asset is actually losing value, you can take a short position in that asset class. And by doing that, you literally sell it at the top, okay, to simplify it completely. So you sell the asset at the top to buy it back lower. So this creates a very unique opportunity for any investor who has access to this, because it means that if a market is actually losing value, you can still make money. So this strategy allows a fund that employs it to create real risk protection for clients during turbulent periods. And this is one of the reasons, if you look at how the fund performed in the first quarter of 2020, a lot of people were surprised that the fund actually made money. And the reason why the fund was able to make money is because of the ability to short certain asset classes. So let me give you an example. The US oil, I'm sure everyone has seen this. Everyone has seen how oil has literally been, the value of oil has literally been wiped out, okay? On Monday, you saw the May 20 futures price for oil lose 99.5% of its value, all right? The only people who could take advantage of a trade like that are fund managers that can take short positions in those. All right. So that's one of the things that we really need to focus on today. As an investor, or as an individual who is trying to protect their funds from losses, can you genuinely say that you are genuinely diversified in your portfolio? How many asset classes do you hold? What's your concentration risk? And do you even understand what concentration risk is? So for example, if all your assets are held in the Kenyan shilling, for example, and the Kenyan shilling starts losing value, it doesn't matter whether you had invested in land or you had invested in stocks or you had invested in government bonds. If all of them are denominated in the same currency, then you have what is called concentration risk. So you're not fully diversified. Now, this becomes very complicated to do on your own. Okay, it becomes a very difficult concept to do on your own, because you'd have to start employing a very complex portfolio allocation techniques that, quite frankly, even if you could end up doing them correctly, would take up too much of your time, because you're not necessarily in the finance industry. And that is why, as Stalin Investment Bank, as early as 2016, we started working towards creating Monsta X specifically to be able to do this on behalf of investors and to create real and genuine portfolio diversification. So, just a moment. All right, so this is our fund, and this is how much. These are our fees. Just quick fees at a glance. So the minimum investment at the moment is 250,000 shillings. So we don't take anything less than 250,000 shillings. Although we are working very hard at the moment to create a platform that will allow us to accept lower amounts than this. But at the moment, this is what we recommend as a minimum to start with. We also charge a 5% annual fee, but we don't charge it upfront. So we prorate it over the year and so on. And then we charge a 10% performance fee if we give you a return that exceeds 25%. So you might ask, okay, so we are saying all this, what have we done historically? We have given an average return of 24%, slightly higher this year, because the first quarter we gave an annualized return of 24.5%. And we hope that, we hope that we will continue to deliver above average returns. And I'll explain to you why I think we should be able to. We also have a 6-month lock-in period. We offer you quarterly statements and valuations. We're actually changing this to monthly statements and valuations. And we will always share with you our fact sheets, what we are doing, what our typical asset classes that we hold are, and so on. We're very keen on giving regular global markets commentary. If you read the Business Daily, every Friday, we actually give a commentary on markets. And we give, so if you look at the global money markets page of the Business Daily on Friday, we do a write-up on a commentary on global markets. So what are the fund benefits? Okay, I had already alluded to this. The most important, and I will really emphasize this, and allow me to emphasize again that diversification is a real benefit of Monsta X. So a lot of people, the first question they ask me is, what returns do you give? And that's what everybody will ask. That's what's on everybody's mind. What kind of returns do you give? But I always tell investors, especially in periods such as this, during turbulent periods, return is all well and good, but what you should be looking at are your downside risks in any investment, not just Monsta X. And there is no way you can genuinely protect investors from downside risk if you don't have real diversification. So Monsta X offers you diversification from traditional asset classes, okay? So we don't have anything against the Kenyan market, but we feel to offer real genuine diversification to investors, we had to tap into financial instruments that are only available on the global stage. And by doing this, more importantly than giving returns to investors, we are able to smooth out their returns and prevent them from facing loss of their capital. All right, so that's one of the fund benefits. Another one is the fact that we trade multiple markets. That's why it's a global fund. So we'll trade various markets as they open and close, from Sydney to Tokyo, Nairobi, London, New York, all around the world. So you have exposure to all these markets. So a Monsta X investor, say you're a Monsta X investor who has absolutely no knowledge about global markets. You can sit pretty at home knowing you actually have exposure to these markets, and someone is actually watching these markets on your behalf. Okay. Then the other advantage we have is we take a lot of positions in foreign currencies. So here you can see we've mentioned the dollar returns, but we also have other assets that are in foreign currency, therefore minimizing your exposure to the Kenyan shilling. And the reason I mention this is because over time, since you're an emerging market economy, even as you grow and as we continue to experience turbulence in global markets, the shilling will continue to be under pressure. And well, even if not short term, over a long-term period. And therefore, it's important as an investor, part of your portfolio should have been adjusted for the weakness in the shilling over time. And most importantly, the inflation that comes with it. The other unique advantage of the fund, and this is very important as well, is the fact that we are able to offer leverage to the portfolio that we hold. So what does this mean? This means that we're able to trade larger amounts than the capital available to us. Of course, leveraging is a double-edged sword, and if you then use it wrongly, you can then dent an investor's fund. But we are very conservative in this fund in our usage of leverage, even if it's fully available to us, but we are able to use that as an extra ingredient in squeezing out higher returns for our investors. Then, of course, the one I had alluded to earlier, trading opportunities. Whether markets are moving up or markets are moving down, we are able to give you a return. And we are able to also protect your funds from loss. Again, because if markets are falling and you're invested with us, we can hedge out that loss. So in that regard, we would not be trying to make you money. We'd actually just be trying to prevent you from losing money, which is what a traditional fund manager will not be able to do that because he's invested in assets, but he's not able to hedge your downside risk. We can do that for you. Then liquidity. We trade on global platforms with global liquidity providers meaning international banks and international brokers. How this helps is preventing a situation where you cannot access your funds. Because everybody, and I'll keep emphasizing the issue of downside risk. So what are the risks when you invest anywhere? First, the biggest risk is the obvious one, that they can lose more money than you gave them. That's the first risk everybody looks at. But for most investors, once they get rid of that risk that, okay, these people have said they'll make me money, nobody thinks about anything else after that, is it? Nobody thinks about, is there any other risk that's associated with investing anywhere? But there is. There is another risk, and it's a very important risk that nobody thinks about, and that is liquidity risk. How do you access the funds that you've invested somewhere if you needed those funds at any particular point in time? All right. So a lot of people for the longest time in Kenya have always invested, for example, in land. As any one of you people know, if you invest, if you need to access your funds, say you have an emergency, someone is in hospital and you had not planned for it, and suddenly you have a medical bill, and you had invested in a property somewhere, you know how long it would take you to actually sell that property and realize the funds needed to take care of your emergency. Okay, and that is a factor of liquidity. Okay, so liquidity is a very, very big risk, and that's one of the things as Monsta X we also looked at. And we tried to create a fund where we're still able to give you above average returns while still giving you reasonable, actually not reasonable, while still giving you very good liquidity. And it actually takes a lot of skill to be able to actually merge those two advantages. Then another big advantage, and this is for our Kenyan investors and viewers today, is the fact that we are local. We are here, we are in Nairobi. So I'll be very honest, this is not the first fund of its type in the world. Okay, these funds exist in Europe, they exist in the West, all over the place. And you've probably seen hedge funds from New York to London to Singapore to Tokyo. Hedge funds exist all around the world. So we only brought the same concept home. And there's a reason, an advantage for this, because in case of anywhere, in case of anything, you know where we are based. You know where our offices are. We are in town. We're in Jekwa Towers on 16th floor. You can come and visit us. You can even come and ask us questions after this webinar. Anything you did not understand, you can come and ask us. You can come and inquire and grill us about our trading strategy. And therefore, giving you the ability to have global exposure, giving you the ability to trade global markets, giving you the ability to trade very sophisticated financial instruments while still being able to access it right here in Nairobi. So think of it as before Monsta X, before Stalin Investment Bank created this fund called Monsta X, think of it as before Uber came and created options for Kenyans who needed to use taxis on a regular basis. It's the same thing, all right? So we are able to give you advantages that have always been enjoyed by investors in other countries. They've always enjoyed such funds, but we've never had the same thing locally. So we are here to change that. Okay, so. Then of course, everybody wants to know, how do you give a 24% return? You must be taking so much risk. That's what everybody thinks. And that's what everybody says. Everybody thinks there is no way you can be giving a 24% return without taking huge risks that can dent the capital of the client. And therefore, a lot of people then get scared because of this. So we have very sophisticated internal models, okay, which actually prevent our traders from exceeding certain exposure limits. Okay, so we have limits of all types, concentration limits, we have dealer limits, dealers being the people who trade. We have automated stop loss levels. When I say automated, that's a very important fact to note, because it means that if markets go against what the portfolio manager has approved to a certain level, then they can automatically stop out certain trades. And this prevents human intervention when it comes to such decision making. So it's very automated. Then of course, we have an investment committee that will have to approve the trades on a regular basis, especially during a crisis like this. Our investment committee is now meeting as many as 3 times a week, whereas we used to meet about once a week. That's how seriously we take risk management here. In fact, I like to say that we're in the business of risk management, and there's a reason for this. Being a 25-year-old company, we are not trying to, cause disrepute not only for ourselves and the industry by engaging in risky conduct of the financial affairs of our clients. So we have a lot of internally created models to prevent that risk from manifesting itself. So anybody who invests in Monsta X should know that we always act with due skill and care as a money manager at all times. And the fact that we give higher returns, I really have to emphasize this. The fact that we give a higher return is not a function of more risk taking. It's only a function of more opportunities that are available to the traders who trade for this fund. And there's a big difference. If I only have 6 asset classes available to me as a fund manager, then I probably have to take risky bets to beat the market and to create outsized returns, isn't it? However, if I have 300 asset classes available to me, then for me to beat the market, I just have to have a more diligent approach towards portfolio diversification to be able to beat market while not necessarily increasing risk. So therefore, what we give you is genuinely risk-adjusted returns. So that's very important to note. Oh yeah, so we also have very experienced people working for us. We have more than 25 years combined experience of our traders. Myself, I've been in the industry for more than a decade, specifically trading for banks. That's actually my background. I've only ever traded for banks, and the same risk management profile that banks run is the same risk management profile I brought, if not higher, because one thing I can guarantee you is that banks never lose money. And banks have always traded these assets and continue to trade these assets. So essentially what banks trade is the same thing we are bringing, to retail and institutional investors with the same level of care and diligence. Then we've also invested in IT infrastructure, and this is quite unique because the fund management software that we had to invest in is very unique to us. Mostly because we have never really had a fund of this type, exactly this type, running in Kenya. So we've had to tweak a lot of our risk management softwares, our fund management softwares, have had to do a lot of work in creating data analytics to be able to give our clients better service in terms of reporting, transparency, risk management, and obviously managing our trading teams. And by this brings us to the next point, how we set limits. So all traders that trade here have limits. They have limits based on the size that they can trade. They have limits based on the asset classes that they can enter into. They have limits on the volatilities that they're allowed to trade in, which brings us to a very interesting point, because one of the things that people will ask me when markets are volatile is, how come you guys never made a lot more money? We saw oil lost, $20 in one day. Why are you guys talking about, how come you never made 20% in a day? Now, if you saw us doing that, you should be very worried, because then it would mean we do not have volatility limits. So we actually have volatility limits in the fund, meaning if we exceed, if an asset class exceeds a certain volatility, then our internally set models will prevent us from actually getting into those trades. And there's no way we can actually get into those trades. And there's a reason for this. So it limits the amount of money we can make for our clients, but most importantly, also reduces the amount of money that we can lose for our clients. Then, of course, we have a very strong team that does our daily reconciliations, and we have real-time monitoring of any positions that we are running. So this what you have in front of you there is just a comparison of what Monsta X, how the Monsta X has performed compared to other asset classes. I'll be very honest, this might not necessarily be at the best comparison, because we are comparing the treasury bonds versus a fund which obviously takes on higher risk, but it just gives you an idea of what kind of returns we give and what kind of additional return we give, rather, in comparison to most of the returns that we have out there, and that's the kind of margin that you're looking at. So how did we close the last quarter? We closed with an annualized return of 24.45, and that has been our performance over time. So we started this fund late December 2018, but what you have in front of you there is a return from the first quarter of 2019. So various returns up and down. Second quarter of last year was the lowest return we had, because we had a lot of headline risks around Brexit at the time. And this when you see the return at that level, it's still in line with our trading strategy, where if risks surpass what our internal models allow us to take positions, then we will minimize trading activity, therefore reducing investor returns, but most importantly, protecting them from losses. And that can be, you can see how that is manifested in the returns. But there's a reason for that, because we're always looking to smooth out our clients' returns and not endanger or take unnecessarily higher risks with their funds. So higher returns in 2020, what caused, or rather in the first quarter of 2020, was mostly due to increased market volatility, obviously giving us more trading opportunities as well. Oil was a big winner, which it's now trading at Actually, now it's a 22-year low. And we saw a complete wipeout in oil. We had predicted this. We had even, we had given investors a brief in January and mentioned that we thought that oil would continue to lose value this year. So we had taken significant positions in that. We have always been very bullish on gold. That paid out very well as well. And we were able to, initially we were long the stock markets in the US, but we're able to quickly flip our positions to short markets early February. And that also helped with the returns that we got. And then we saw some currency pairs lose value, like the pound against the dollar lost over 6% in the first quarter. Those are currencies that we were able to also trade within short-term time frames to help us squeeze out a good return. Again, being able to give these returns was obviously also exacerbated by the ability to trade using a long and short trading model. So that is it. I'm now ready to take your questions.
Perfect. The question that I have
yes.
is the 24% return a gross or a net? So are there any tax implications on that, or is it gross or net?
So that 24% is gross of our fees, but right now, being a capital markets product, it's actually not taxed. But we always advise our clients who invest in us to always also seek advice from their tax advisors, because one of the reasons. So just back to the 24% revenue. So what 24% is our average return. Some of our clients will have a much larger return than that, but that is the most prudent figure that we put out there based on the movement of the fund from inception to now. But yes, it is a gross return.
So a listener says, can people withdraw the money that they've invested in case they feel that they want to withdraw earlier than the lock-in period?
Okay, so we add the lock-in period we give is actually something we advise. Okay, but we have no withholding penalties. We have no withdrawing redemption fees. So if at any one point an investor felt that they want to receive their funds, we are happy to pay out. And we have done that in the past to some investors, not just because they're not happy, but sometimes you could be facing an emergency.
The other question I have is, can an investor decide the asset classes that you would invest for us, or is that a decision that's made by SIB?
At the moment, the fund is fully discretionary, meaning that we make all the decisions on behalf of the investor. So we are not able to allow investors to make decisions on what we should buy or sell on their behalf.
Okay. One of the investors is interested to know, can you guarantee a minimum return, and what would that be?
So, wow. So I don't know. A minimum return. I know a lot of Kenyans are used to funds that, in quotes, give guaranteed returns. First, I'll say that's illegal. I've been in markets long enough to know that there's no guaranteed return in any market. Okay. The only thing I'd say is, what you should ask yourself is, are you comfortable with the risk management abilities of the fund manager that you put your money with? So can we guarantee a minimum return? At the moment, I cannot answer positively to that. But you can look at our history and see that if you can look at our history, and maybe our historical returns can help an investor make a decision on what the worst case scenario for the fund would be.
Right, and I think that makes sense. I mean, even if I was putting my or T-bills or bonds or something, I think it's the same thing. You would have to really trust the person that you're investing in for you to be able to know whether you want to put your money in with them in the first place, right?
Exactly.
Okay. A question that I have is, can you please explain the minimum top-up fee of the 100,000? What is that fee about?
Okay, so the minimum, so it's not a top-up fee. I think maybe that was really a grammar issue there. It's the minimum amount of top-up that we can accept. So say you have topped up say you've invested $1 million shillings in Monsta X and you wish to top up. So the minimum top up amount that we can take from you is 100,000 shillings. So we cannot accept, say, a top up of 50,000 shillings. That's what we mean by that. So it's not a fee, it's really just a minimum amount.
Got it. Okay. One other investor, so we'll have maybe just 4 more questions, and then we will see if there's anything else that maybe the team wants to share with everyone. So the question is, right now with what's what is the most stable asset class to trade in, and do you think precious metals are more secure long term?
Okay, the most stable asset obviously is cash. Cash is the most stable asset, so, and cash equivalents. Cash and cash equivalents. And if you look at how our fund has operated over time, during periods of turbulence such as this, at some point you can find our fund holding up to 80% of the fund in cash. So cash and cash equivalents, of course, is the safest, and that is reflected in our trading strategy. It's a very big part of our trading strategy. And then, do I think that long-term precious metals are good to hold? Absolutely. Monsta X has been holding gold since the $1,200 an ounce levels. Today we are trading at $1,700. So we are fully in line with that strategy as well for holding metals such as gold over the long term.
All right, and you please equivalent. So there seems to be some investors who want to have some clarity on what that means.
Cash and cash equivalent. So cash, real physical actual cash in a bank, all right, or with various financial institutions, as well as fixed income assets. So when you buy a government bond, that is considered a cash equivalent asset. When I buy a Euro bond, when I buy US treasuries, those are cash equivalents.
Someone has an fund that they want to use for investing in the Monsta X, for example. Is there a possibility for Monsta to take the funds from their pension management company, right?
Yes.
And invest on their behalf? Is that something that we can do, or that's at the discretion of the company itself?
So that is actually something we can do. Of course, we'd have to do that working with the trustees of the pension fund, because they're the ones who make decisions on behalf of the investors who have invested in that fund. So we've had some trustees approach us with the aim of maybe deploying certain funds within Monsta X, and that's a conversation we can always have. Yeah.
That because we have a few people in their SACCO funds in Monsta.
Yes, like we even have SACCOs coming into us. We're in talks with several SACCOs as we speak, who are looking to not only give higher returns to their clients, but they're also looking to invest in more liquid assets, because they've been traditionally stuck in less liquid assets, and they're looking to diversify their liquidity risk. And this is something that we are helping a lot of SACCOs to work with.
If anybody else has other questions, you can just send them to us in the chat. So the final question is, investor wants to understand if the 50% commission payout from SIB, how does that get calculated against the return of 24-25%?
All right, so you're asking about the performance fee. So first of all, the performance fee is 10%, all right? And this is applied on the return exceeding 25%. So for example, if an investor is able to get a return of 30% from the fund, then the fee will be 10% of 5%, not 10% of 5%, 10% of 5% in that instance.
I think that is clear. Yeah, it is. It has been a little stable. I think for any who would like to write to SIB and ask them more about whether in general, the email is events@sib.co.ke, and we will send a fact sheet, a fun fact sheet, to everyone who has attended the webinar as well.
Great. And I just wanted to add, Renu, because I've seen some questions here in the chat room. And it's important to emphasize that, yes, we are fully regulated by the Capital Markets Authority. And I also wanted to emphasize that back on the liquidity thing, how fast do we pay out? If you wanted to receive your funds, we do that within 24 hours. That's how quickly we pay out. That's also important to note.
If you have any other questions, please to us. And much, Nashon, for the time.
Thank you, Renu.
Thank you, Nikkei. Thank you, Victor. Thank you, everyone, for having the event.